Okay.
So we are live on YouTube.
Okay.
David, okay. So for anyone who is already, oh, so I have to disconnect this. So for anyone who is right now joining, we start in a minute. Just looking at some technical issues prior to start. Okay, so for anyone, okay, this is one of the issues. We have feedback. What's the feedback from you, David?
So I opened the YouTube link.
Okay, so yeah, this was what I just want to check.
Right. The link that you sent with the streams link on YouTube still doesn't connect me to the video.
Okay, can you post the link which you have right now on LinkedIn, please? And on
Yeah. All right, I'll do that.
post it in the chat channel, please, and post it in the Telegram, please, so that we can share.
Yeah,
digital Davos and Davos also.
yeah, this is the link that appears to be working, and then yeah.
Okay. So we have 1 o'clock. I wait just for Andre to come back, and then we can start.
I'm back. I'm back.
Okay.
Okay, all good.
All good.
Yes, let's do it.
Okay, perfect. So everyone, thank you very much for joining Digital Davos 2023 Roundtable Educational Session regarding hedge funds, VC funds, offshore funds, and onshore funds. This session is brought by you by chainBLX SPC, a segregated portfolio company domiciled in the Cayman Islands. chainBLX SPC assists clients to get offshore funds under their umbrella as segregated portfolios quickly and easily established. We've here with us Andre. Oh, your last name Andre always. Can you help me with your last name?
Duke, like
Duke. Okay, like Duke, like the nobility. Okay, sorry, Duke. He is a YGL and has numerous accomplishments. Here he represents his fund from the Ukraine, which is really special and is basically a fund which is like a Marshall Plan for the Ukraine, which we are really eager to hear some information about this. We have also here Davos. He has a crypto fund. David was one of the youngest people I know ever graduating from Berkeley. I think he was not even 18 as he was graduating from Berkeley. So compliments on this. And he speaks about his endeavor and the crypto funds. Myself, I'm Carl Seelig, curator from Digital Davos and CEO of chainBLX SPC. I invented also the ringback tone replacement back in 2000 and created with this a $5.8 billion yearly market. prior to starting and having our panelists introduce them a little more in detail themselves, the mandatory disclaimer. This is an educational session only for information. Anyone who wants legal advice or wants to act on advice is strictly encouraged to seek professional assistance from a CPA, from a certified lawyer, from a certified tax or financial advisor, and not act on this in content, as this content is only for discussion reasons. It also doesn't gives any advice whether or not to invest in any funds or so on. Thank you so much for being part of Digital Davos. And I would like to start the discussions at this point. My first question would be to Andre and to David. The first question is, every company which starts is equally like a fund, hedge fund, or any fund which is start. And the most important thing by starting any project in your life is that you can put your soul into it. So my question, if you don't put your soul into it, it will not function. So what is the soul which you put in and which reflects in your business endeavor as a fund? I would like to start with Andre. Please describe the soul of your fund and first say if it's a private, hedge fund, public fund, mutual fund, please.
Thank you, Carl. Thank you for having me. Well, it's very important.
Introduce yourself also quick, probably.
Sure. Absolutely. Well, but basically, my introduction also correlates with the answer to your question in terms of the soul, because I started. I'm a Kiev-born entrepreneur. I went to New York City back in 1992 when I was 20 years old, where I started my first company in electronics. I built it in 12 years in the $1 billion revenue business. But that was my first one. Overall, I was involved as a co-founder in the 10 companies in telecom, media, and technology field. So, but I started, when the time I started my first fund, which was my fund, I only invested my money back in 2001. It was a venture fund. But till that time, I already had the 4 enterprises that I built. And I decided to support other entrepreneurs that want to build something in the US. So basically for me, it was extension of what I've been doing as an entrepreneur, but actually putting some money from the exits. Already at the time, I had a few exits. So I put the money to support the other entrepreneurs. They actually been following the same model of having the talent and R&D technology based in Ukraine and building the business in US, meaning sales, customers, everything. So for me, that was very important because I had this narrative that I did it myself. So I would help other entrepreneurs with not only capital, which is people call it smart value add capital, which is meaning hands-on approach. So it's not only money allocation in the fund, but actually how to help the other entrepreneurs to succeed. Basically, for them, I was also the role model because I was successful, and that was very easy for me to attract the other entrepreneurs and actually help them to build something in the US. So this kind of was my first fund. Till 2012, I only invested my own money. It was 5.1 million as a captive fund. But in 2012, I also attracted as LPs other tech entrepreneurs, and we've done $17 million investments. So overall, for all my investors' career, 36 investments, 14 exits so far. Okay, so many more ahead. And I'm raising our third fund, which is for the growth capital, $100 million, just to support the entrepreneurs that are building global companies. So this is basically growth stage venture capital fund, which I've always been doing, which is direct investments into the companies and so on.
Thank you. So with Kiev and born in Kiev, raised, and right now with the ongoing war in the Ukraine, you envisioned with your fund something really special, like we spoke about this a lot, but I have to reiterate it for our audience here. So the Marshall Plan and the help from the private sector to the IT private sector. Could you tell how you got the idea and how you got involved there, and that you were the first one speaking about this prior to anyone spoke about this? You spoke at the first day of war already about this.
Yes, absolutely. Because number one, for Ukrainians, the war started not in the February last year, but in the March 2014. So we've been for 8 years already in the war. Ukraine itself have minted 8 unicorns, including 2 that appeared last summer. So this is why you see all the resilience coming from Ukraine. The private sectors is still performing. Not only building unicorns, of course, all the industry is already performing. And for 8 years, we, as an industry, done more than 1,000 investments together with the 300 US funds as a co-investments vehicles. So basically, the Ukrainian entrepreneurs, they're pretty much strong, even during the war, to perform and to build all of this. And this is why, in order to rebuild Ukraine, which is multi-trillion-dollar opportunity. We discuss this in Davos and everybody confirm it. But the question is how? And this is why it's very important on institutional level, in order to fight corruption, we are proposing, and I'm talking on behalf of all the funds and the fund managers that have been investing in Ukraine. The only way to fight corruption is to go through the GPLP structure. So to channel money in to someone who's actually will do it efficiently with no corruption, because there is governance involved and all of this. And this is why it will be efficient, because Ukraine is not, I'm sorry, with all respect, not Iraq, not Syria, not Afghanistan. We have a private equity venture capital industry been there for decades. And this is why the current investors, new investors like BlackRock raising $25 billion fund, some other guys, they will step in together with the international community to what we call rebuild Ukraine, but basically not only post-war, but actually the venture capital investments already happening now, and similar to Israel, they've been also in the war from the risk profile for decades. The same with Ukraine. So the war doesn't stop you from the investments. Number one. Secondly, as you know, Carl, all innovations are happening during the war, okay? Because when the people are in the self-survival mode, they're becoming creative. And I'm not only talking about the dual use or the military tech, I'm talking about all the kind of energy which is actually help the entrepreneurs to defend the country, but they're also very agile on the building services, because they also need to win on the economic front. So my message to all the people that help Ukraine today, the best help to Ukraine is to co-invest with us, with the investors, and co-invest directly in the deals, as the co-investments, invest in the funds, and so on and so on. This is the best way help, not only help to make money, but also to make it economically strong in order to perform. And I'm bullish, very bullish on Ukraine, because I've been invested only in Ukrainian founders for the last 22 years. And I'm continuing to do this. It's number one. I put in my own money in all these years. And secondly, I'm also for 8 years chairman Ukrainian Venture Capital Private Equity Station. They have 50 members, and none of them stop investing in Ukraine. And half of our members, by the way, are international funds from US, from Europe, and none of them stop to do this because they see how resilient the industry is. And that they perform in, and the exits happen, and fundraising happen. It's already mentioned 2 unicorns happened last summer. Everybody is amazed with US funds, the big funds that invested, and so on and so on. So everybody's welcome.
Okay, thank you. So now we hear it from Andre, and basically summarizing, it's a fund which is coming from the heart as a Ukrainian person, from the heart as an entrepreneur, seeing the need to help follow an entrepreneur, and from the heart of doing something right, something which is always nice to feel. And this is the soul of a fund. Only with soul you can really do a profitable business and motivate yourself to do the best of your job. And this is what investors want. So I want to go to David, which is in the crypto market. So as it's decentralized and you want to get trust and soul and everything out in the crypto market, and that it's only based on mathematics, I know from you there is also a lot of soul and findings in the crypto market. So David, could you please describe your fund for a moment, quick, and what is really the soul? What brought you to this? What inspired you to open a fund first, and then what is the soul of your fund? And please also introduce yourself more in detail.
Absolutely. Yeah, thank you for the introduction, Carl. So yeah, in terms of my background, I have a very international background. Grew up speaking multiple languages. I've lived and traveled all over the world, and started out more in kind of the technology and social impact areas. And the more that I got involved into the blockchain space, the more that I realized that there was this very strong international impact potential, but also that there was a very strong kind of gap in the knowledge of the systems, where it's not a very user-friendly scenario. So ultimately, in terms of the soul of the fund, I would say that is very international, very oriented towards the ability for blockchain and crypto to make a transformative impact into multiple countries, multiple industries, but also realizing the need to bridge the gap between kind of more traditional information systems and the blockchain ecosystem, to play by existing rules in order to help that transformative potential. So I think that that's really where something like a Cayman fund kind of comes into play, where you have a traditional structure, unlike, say, something along the lines of an initial coin offering, initial token offering. You have a much more traditional regulated structure, but also one that is very flexible in its global reach. So that finding the right, I would say, finding the right structure that goes with that soul of the company is also something that is important.
We will also shortly discuss structures in my next question. So summarizing the core soul in one sentence, the core soul from your fund.
And I would say we are focused on the ability for blockchain to generate transformative systems that can also build wealth for people around the world. And we're focused on doing that in a way that is compliant with existing regulations and existing systems.
Thank you very much. So also from chainBLX point of view, we are opening a lot of funds under our umbrella, a segregated portfolio, make it easy for people to open funds in the Cayman Island. One of the requirements is we don't take anyone in just who wants to apply. We are very selective. We believe in ESG. We believe in the soul of the fund, and that somebody has to bring more than just expertise, but a vision, a conviction, and the heart to try to change the world better. This only will help the whole brand of chainBLX, and so we are really there selective. And I'm happy that David is one of our clients, and we are also in discussion with Andre about some cooperation. We are also happy that Andre will join us with his input. And so I want to go to the next question, as this is a seminar type of roundtable where we want to give a general education to our audience. So when we speak about funds, and there we hear a lot of things. We know that there is VC funds, there are hedge funds. We hear general partners, non-general partners. We have mutual funds. We hear initial token offerings, initial coin offerings, all the things. And I want to just sort this out, methodology and quick. So let's first get rid of ICO, initial token offering, initial coin offering, and initial hedge funds. Initial token offering and funds. This question for David and for Andre, the difference why he choose VC fund and why he choose what we call in Cayman Island a private fund, here in United States a hedge fund. So David, please start. Why did you choose a fund structure instead of an ICO, and describe what an ICO really has to comply properly, the Howdy test or something like this?
Yeah, so in terms of the focus on managing risks, an existing fund structure, GPLP structure, has been tried and true for helping to identify and manage risks appropriately. While we are very much passionate about the blockchain and crypto ecosystem, we're passionate about its ability to integrate and with existing systems and help to transform them. So something that has like a much less proven track record, such as an initial token offering, initial coin offering, ITO, ICO, these ultimately they haven't really stood the test of time of showing how they help to manage risk, and they have not in many cases been compliant with existing regulations. So for us, from the get-go, the focus has been on basically bridging that gap between the transformative potential of new technology, but also with playing within existing rule books.
And so I would like to speak here also quick to some misconception which often is there. When people call something just a token, it doesn't mean that the Security Exchange Commission or other regulatory bodies would see it as a token. There's tests which make totally clear if it's a token, if it's a utility token, or if it's an investment. And when you just call something another way and you don't call it anymore a share and you just call it a token, it doesn't matter for regulations. You still will have to comply to the regulations. In America, we have the Howdy test, and I encourage every one of our listeners to look this up and to make himself more familiar. It's a four-pronged test to see if basically it's a stock disguised as a token, or if it's a token, which is a utility token, and it's not under the jurisdiction from the Security Exchange Commission. By this, I would like to change and go to Andre and to emphasize a little bit more. Why did you choose basically the private fund, the hedge fund, versus a mutual fund as a construct? What is for you the biggest choice? And please also, for our audience, quick explain the difference between a private hedge fund, VC fund versus a mutual fund.
Well, thank you, Carl. Well, we went for the traditional model, okay, because obviously this is a GPLP structure in the venture fund. On one hand, pretty much secured for any LP, because we're also LP, right? So we're not only GP, but we're also an LP. And secondly, I would say that it's very transparent kind of model in terms of the capital allocation, how the hurdle works. In our case, it's 8%, and then it's a split on 80-20 on the carry. So all of this in the venture fund, and of course in the venture fund, of course, we need to have some horizon, because basically the fund structure is like through the capital call. So basically we have investment period. You know, for example, the first 3-4 years, we believe that we're going to invest the funds that the LP committed. And then we also believe that within this 3-4 years time, we will also have first returns, first exits, because we are focusing on the growth stage. Of course, on the early stage is not possible, but on growth stage is possible. And this is why it's very also important for the LPs not only get stuck for 10 years in traditional fund, but also have to have some liquidity back after the first exits coming in, because obviously after the first exits, the all money 100% goes to the LPs, which makes their returns and the horizon much shorter, which is also good structure in this sense, which is very important for many kind of LPs not to be locked up for let's say 10 years period, which is always pretty much the case for the early stage investments. It's very hard to get the money back unless you're successful in the many cases at the early stage. But because they're focusing on the growth stage, this kind of structure is more appealing in our case, and this is why we have chosen for our fund.
Okay, so this is of course clear that as a VC fund, and basically later on what VCs call the Valley of Tears, after you invest, it takes a long time to see the returns. You have to have a lockup period and you have to hold through this period. We will later on speak about this, the valuations and for second rounds and so on, how the accounting system is really important, like GAAP accounting and evaluation of the assets. But in generally, what was not touched is related to this, the mutual funds, which are basically funds where everyone can invest, and the hedge funds, private funds, which are only for accredited investors. These are two different animals. Also two different animals from the regulations. One is a high risk investment, the hedge funds. Also, when we try our best and want not to admit that it's high risk, it's a high risk investment as less controls are there. And more controls are on mutual funds, starting with the fund accounting, with the onboarding principle, and so on. So these are two different entities. And the pricing for opening a mutual fund is much higher and consumes much more than from a hedge fund. So for smaller raises, small capital under administration, and for higher risk, for ethical reasons, it's better to have a hedge fund because you want to have investors in which know what they're doing. A mutual fund, you can not overtake some risky investments, and you have to also be aware that a lot of money from the mutual fund will be spent on administrative costs. Speaking here about Cayman Islands, hedge funds, and Brussels and United States, there are differences between hedge funds in the Cayman Island. Cayman Island has regulations that hedge funds have to be registered with the SEMA. Hedge funds have to be basically audited. And when you raise money in the United States with a hedge fund, you have to follow and you have to file a Reg D, you have to file a Reg A. There is also regulations and so on. Then when you have international investments, we know about regulations like you need a GII number, for example, where you can inform the United States taxes when United States citizens or residents invest in your fund. So there is a whole more construct problems with offshore and onshore funds, which I want just right now to address. One of the problems is also finding a bank. Offshore funds have more difficulties to finding a bank than onshore funds. And then at the end, we have to see also the relationship between finding the money, for example, with Basel, which shows the risk status of where the money comes from and compliance. So by speaking about this, I'm always interested to speak about this more in a case study way than in a preaching way down. So let's probably start. Why, David, did you choose an offshore fund versus a United States fund?
Right. So it goes back to that. I think your point about the identity of the company and what makes sense for the focus and the values. So in that regard, the international component is a really big thing for us. Cayman is number one for international funds and is kind of a known quantity. So we spent a lot of time researching, what would be the prospective best environment, and there may be other jurisdictions where there could be, say, fancier bells and whistles or whatnot of certain, options of cool stuff you can do. But when it really comes down to it, of kind of the reliable workhorse of the offshore world, it comes down to Cayman, and that was something that was very interesting for us. Thinking through our experience on the regulatory side with blockchain and crypto, really kind of the approach has been, we want to have something that will be, we want to have a framework that's clear and that we can rely on right out of the gate. And historically, so far, that hasn't really been our experience with US blockchain and crypto regulation. So in that regard, having guidelines that have been clear from the get-go from Cayman, but that have also been structured in very kind of similar legalese to a lot of other, former British colonies, for example, means that there's clarity for what we should be doing, but there's also clarity from, and I guess opportunity for better clarity from the investor side on what the regulations mean, what the terms and conditions are within kind of a known quantity legal system. Beyond that, something that was also interesting to us around the Cayman structure was that they were actually in many ways more stringent on certain requirements for investor protections. So requiring these nationally accredited third-party audits for the fund was something that we weren't really seeing on the US side for what we were looking to do. So this a kind of ironic perception of Cayman as being an anything goes sort of jurisdiction, but then seeing that there's more clarity upfront for what we're looking for and potential for better investor protections as well was something very interesting to us. And then relatedly, I would say that that because of that clear path of the Cayman structure, we found it interesting that that these Cayman funds could be potentially listed onto could be taken public essentially toward public bulletin boards within Cayman, something that is a lot harder to do in the United States. So basically, more clarity, more functionality, more international comprehension of what it is that we're trying to accomplish.
Thank you. So, Andre, your fund is domiciled in Delaware, am I right?
Yes, that's right.
Okay, so my question is, why did you choose Delaware, not living in Brussels, or Ukraine, as you are investing in Ukraine? And if for you, basically, what was you considering also to gain outside investments in your fund with the requirements from the United States to withhold taxable earnings for this fund without giving tax advice, please? We don't want to get here in hot waters. We just want to speak about the reason, because of course, we know everyone has to pay taxes, and an offshore entity is not to avoid or to circumvent taxes. It is just another legal entity. It has some advantages and not. And of course, foreign investors investing in the United States, they will have a withhold from 30% when it comes back. And when you invest in Cayman as a foreign investor, you have other legal ramification. When you're United States, of course, you have to pay the taxes. It doesn't matter if you invest in the United States or here. So what was your thinking about the whole issue, which I spoke right now, to choose Delaware instead of Brussels, Ukraine, or offshore?
Mm-hmm. Yeah, historically, we've been using BVI as a vehicle, but this particular case, we have chosen the Delaware for two reasons. One is that when I say the Ukrainian founders, we are invested in the basically US Delaware-based or Delaware-registered companies, okay, run by the Ukrainian founders. So basically, the next raising rounds, we also raising from the US investors. So we've been doing this for decades, and now it's easy to do this when you are US. So this is the second reason. And the third are exits. The exits because historically, the majority of our exits, I would say like 80%, happen to the US investors. Like last year, we sold company to Qualcomm out of San Diego. So, and having the US entity or the fund is much easier to raise, to sell, meaning exits, and so on and so on. And it's number one. It's like from the operational standpoint, how we operate as investors in the US market. And the second reason is that Delaware structure based on our international LP base is pretty much appealing for the non-US accredited investors that are LPs in the Delaware registered fund, which is also has a very, let's say, good potential in terms of the something related for their returns, like taxation system for the non-US residents, and so on as well. Okay, so it's also very important who is your LP base. If it's US, it's a one story. If it's also international, it's also taking into consideration that the Delaware registered fund could work for many of those as well. This is probably kind of second reason, but even for the US one, to be honest, you know that many of our investors that now are moving, for example, from New York to the Florida, okay? So they say even being the US investor with the Florida tax residency, even investing in the Delaware registered company is a different story already, and it's pretty much good that many say that, yeah, we would go for the Cayman just for the purely for the tax reasons, but for the people that don't not only want to do this for the purely tax reason, they can also go for the Delaware as well. And the third, probably for us, it's not kind of very usual structure of our fund. I mean, it's the usual structure of the fund, but something which is unusual in our fund is that which is also appealing to the US let's say institutional investor, and that is that we are asking our LPs to allocate 10% of the fund investments, not for the investments, but for the grants or for the refundable loans to the families of the companies that we invest. So basically, it's a kind of has this because it's Ukrainian angle, right? So the many US based entities, they look at our fund not just for the for the profit, but rather for the impact and from other reasons, which is also good that we are US registered fund from this standpoint as well, because it's pretty much unusual when the fund managers asking some of the portion of the LP commitments will go not directly to the equity, but will go alongside to actually, for the good kind of reasons, even if it's refundable loans for the families, etc. It's also which change the optics of the funds. It's obviously give the competitive edge in comparison with other funds that have this kind of capability to do this for the Ukrainian founders and so on and so on. So it's also kind of one of the reasons why we also gave the green light in terms of to do this. But I tell you something, which is, as you probably know, but it's also relevant for the big funds. If some of our LPs will be asking us, for example, for the Cayman structure, as you know, for the big funds, at least from 100 million or more, it's possible to have it two different pockets for a few groups of LPs, okay? Because it's going to manage by one GP company, but the structures of the funds, one could be in the US, the other one could be in the Cayman Island. And what I like about the Cayman Island structure that you can also receive the LP commitments in the crypto, which is pretty much unique, and I like this. So once our LPs will be asking us for the Cayman Island structure because of the whatever tax reason, other reasons, and so on and so on, we would be okay to also to set up the Cayman Island fund just because it's more appealing to them, which as I understand, because many LPs been doing Cayman Islands for at least probably for the last 30 years. So I understand why they've been continuing to do so. So for us, it's no kind of deal breaker to set up it for the sake of the LPs that will go for this setup.
Thank you so much. So here we were really touching on two main points. One point was that basically it is based on the soul of your company and looking at the investors, where you go, and also in the experience to manage the fund. Of course, a lot of funds are in Cayman Island. My partners and I were looking with our lawyers, of course, also at Delaware funds as we started this company. We choose Cayman Island not for taxation reason, not for the reasons which most people say obvious. We choose Cayman Island because of the possibilities of segregated portfolio companies, where we can quick open funds under the same accreditation. And we choose it because of the external audit, as we, as an umbrella providing hosted funds for many, see our obligations to make investments safe. And we prefer more eyes on it than other eyes. So it is basically, you have to look what everyone who has a fund has to look at the goal which it achieves. Sometimes you have a feeder fund offshore, you have a fund in the United States. There's a lot of constructions, and this has to be really evaluated. It is not that offshore is a catch-all solution, as well as onshore is not a catch-all solution. It is an individual choice which has to be first really carefully overthought. Also within the United States, it has to be overthought. Then when you raise money, if you raise it over Reg D, Reg A. So here we always, again, say that you should first have a really good idea, the soul of your fund, then the strategy, and then speak and seek advice from professionals, which will help you to find the right solutions. And I would like to go to the next point in our discussion. And this is what are some elements of the funds. So here we will just go what you need as a team when you start a fund, because one person alone cannot make a fund. It is always a whole team behind every fund. I want to speak here about asset allocations in this segment of our conversations. We speak about anti-money laundering and know your client protocols, which have to be in place. We will speak about lockup period and about ethical marketing for your fund. So this all brought out in general, it's services which we provide, but also, as I said, everyone has to find the right service providers tailored for his fund. So I would like to start. Who wants to take it first, Andre or David? The question is, how did you tackle your AMI and know your client? No, first, how did you tackle the management from your fund? Who wants to speak first about his management?
Well, I can start with the management. It's easier for me. Look, it's a very important point because the journey starts when you raise the fund, because basically the team should be capable to deploy the capital very efficiently. And so that means you need to have some time and experience to work with your team on some of the investments, because obviously it's very hard to gain the new team experience and have a first 3 years as an investment period when you have to deploy the capital. So that all means that you need to have the team experience first in order to actually even go in for the fund, because it's kind of work both ways. LPs understand that they invest in you, in your capability to actually to do the investments properly, and also to have a value add, because once again, we not just purely allocate the capital, but we are experienced entrepreneurs with a hands-on approach. Because if you don't just provide the capital, probably you're not going to win many good deals, because the entrepreneurs will ask for something from you, from your experience, your relationship, because it's a long journey from origination, development, investments, fundraising for the company, and exit. So it's all cycles. So basically, this is why team is very important, that you will be very synergetic to each other in terms of your competencies, in terms of your experience, and also to have this group dynamics and experience before. Because once again, it's important for the fund operations, but it's also important for the LPs because they understand they're gonna invest in you, not in the fund. But it's also important from this standpoint. And I just give you the example that what we tell to the many entrepreneurs, guys, please focus on what you do the best, which is a product, the sales to the clients, and so on, and we will help you with the rest. So with the fund, the team should be focusing on investments, not on the fund administration, not on the fund legal side, which is important. So for that, you also need to find the partner that's gonna take care of this, let's say, back office or back end operation, which are essential for the fund. But obviously, you need to rely on someone that's gonna bring this experience to your team. Okay, this is how we actually work with other partners that gonna cover this very important fund part of the fund operations. But obviously, the most important part of the fund managers is actually to make investments and help the portfolio companies. So basically, you cannot do both, and better to find the right partners that actually gonna cover this very complicated, very changing because of regulation world, right? So I've been in this for 20 years, and every year something new come up, okay? And basically, it's very hard to keep all the changes. So I rely on the people that actually do it professionally, focuses on this type of things, also relationship with LP and with other legal stories, because unfortunately they happens. Also on the LP side, and you need to also take care of this from the legal standpoint, and so on and so on. So many things will happen. So better to have someone who's gonna take care of this on behalf of the fund.
Thank you. So you touched really good points here, and of course, this was also one of the big ideas from chainBLX that we enable fund managers to do what they do best and to assist with other things in to support the teams and to increase the teams. David, you started a crypto fund and you started first with personal experience, and then what is your thoughts about team and how did you finish up then with chainBLX?
Yeah, so in terms of how we had started, we had basically been building a crypto investment track record over 5+ years, where we had managed to outperform Bitcoin investment by up to around 10x. So if for people who had bought Bitcoin around 6 years ago for $1,000 or so, they'd have around $25,000 today. For people who had invested into our initial fund track record from 5 years ago, they would have closer to around 200 or 250,000 today. So to that point, I mean, we went from operating kind of on a more individual level to, as Andre had said, working more closely with a team. And I think that dividing the roles out and trust are kind of the two key factors that I'm hearing from Andre and from Carl, really. So in terms of dividing the roles out, yes, it was for us, it was an attractive idea to be able to work with a third-party fund manager such as chainBLX that would help to augment the overall systems in place, where our experience was more on the crypto, on the asset allocation side. And so we did have that team track record that we built out, but having a close trusted partner that can be augmenting our capabilities through additional research, through their AML and KYC processes and procedures, that was something that was of interest to us. And relatedly, in terms of the marketing, which is I think something that Carl had asked about as well, something that was interesting to us was also basically developing close relationships with the network that we're helping to build. And so for us, it made more sense to basically be operating under a 506B sort of a structure rather than a Reg A plus structure, or rather than a 506C structure, where ultimately, if we do have this very international focus, it makes it, in our experience, all the more important to have close established relationships of trust with investors, partners, etc. So for us, something along the lines of a Reg A plus didn't necessarily make sense because it casts too wide of a net, and then something like a 506C didn't make sense either because the kind of less I would say fewer restrictions on the marketing was actually something that we saw as a prospective downside for our strategy of developing more relationships through in-person connections and existing connections.
Thank you. So now I would like to go a little bit to the more unpleasant subjects about hedge funds, venture funds, and private funds in Cayman Island in general. And this is just for our audience to tell them about it. Basically, we know where's money involved. Also, fraudulent activities are common. I don't want to speak about Cholo, which stole from a sovereign nation fund, I think 4.7 or was $5.7 billion within 4 years and is still running around. We want to, this is of course fraud at the highest level, but we see in this case that the fraud is committed from the entities to and the managers to the investors. But we see also why, first of all, I want to address why the Know Your Client protocol and the anti-money laundering protocols and your officers, which enforces protocol, your SOP, which describes this protocol, is so important. And there, I would like to know from David a little bit, without naming names, but a little bit of horror stories. What comes in first when you open such a fund? Because at the beginning, everyone looks for the target who is the newest one and tries to sneak in, and you started to become experienced, and you, of course, avoid this because you have the right protocol in place. Andre, I wanted to speak with you as more seasoned fund professional. How was your experience in the beginning? And of course, you are more watchful right now, but how is it going right now when you look a little bit more in the future and you become more experienced? Who wants to start? Let's start with Andre because David spoke last.
Okay, this is very important kind of issue, yes. And in terms of the history, of course, when you raise in the fund, of course, you're dealing with all different type of people. And then at some point when we were approached by different kind of LPs, and we were explained that even if you will accept some of the money, then on the due diligence, when you're gonna, for example, exit from the company or raise the new capital, due diligence is not only on the GP, but due diligence is also on your LPs. Okay, at least we have this experience. And then we realized that we need to do the KYC on the LPs as well, because if you don't take the relevant people to your board, that will put in jeopardy all the portfolio, especially on the fundraising and the exit side. So this is why we never took the money from, for example, oligarchs or for people with the kind of exposure to the different corruption schemes and so on and so on, for a number of reasons. And this is why if you look at our current LPs, all of them, the tech entrepreneurs from the US and from the Europe, from Ukraine, but this is the people that we help to sell the companies, which have legitimate proceedings and the returns and so on and so on. So it's very important. Once again, even the fact is that basically they commit capital for the capital calls, but you need to know two things: who are your LPs, and in terms of their background, etc., because it's very important for the operations, which I explained. But also you need to understand their liquidity, because unfortunately we also had cases when unfortunately some of the LPs did not or could not participate in the following capital calls, and then you need to, as a fund managers, find for the replications or ask other LPs to actually come in with not the pro rata capital, which also not good from the different standpoint. So for all of these reasons, you need to know your LPs as well, because they do due diligence on you, but you need to make the due diligence on your LPs as well, because it's, once again, it's a long journey, and many things may happen, and that's why you need to be in the good hands, and let professionals do their job.
Thank you, David.
Yeah, well, so I mean, I think an analogy that makes a lot of sense is that, you know, if you're opening up the new bar in town, then all of the clients that got kicked out of the main bar in town are your first. So it's, you know, potentially like the dangerous ones, the violent ones, et cetera, right? That are the first ones coming to you. So similarly, I mean, coming in with, you know, as an emerging fund manager, there's a lot of very healthy skepticism that I think, you know, I've needed to start developing. and also just realizing that that basically in terms of potential bad actors and such, it really is often the people that that are among the most respected, that can be problematic, or that can be also in turn the victims of such things. So, for example, Ulysses S. Grant was a former U.S. president. He ended up being a GP in a fund that was actually, he had a fraudulent partner. Or Sir Isaac Newton actually lost something like half of his net worth investing into railroads. So I think that especially when it comes to something like crypto, as an emerging fund manager within an emerging industry, really focusing on a couple of key areas has been important. Focusing on custody, for example, making sure that there are trusted partners in place for us, such as some of our vendors, such as chainBLX as well, our partner. Also looking at the the comprehension of something, if it's able to be explained clearly. And so having partners in place that can help to simplify and explain what's going on in a fund structure has been very helpful. Also focusing on making sure that there's essentially the right kinds of rails and procedures in place, where if you have a game plan and a interesting looking opportunity comes by that doesn't fit with the game plan, sticking to that game plan can, I think, in many cases help reduce the likelihood of falling for attractive looking tricks or attractive looking problems, essentially.
Yes, thank you. So, as addressed, as you said, in chainBLX, we also invest enormous time prior till somebody opens a fund, especially to discuss these issues, especially to find these issues and make sure that, how David was saying, that you stay on track. Diligence is an ongoing issue. When somebody was good today, doesn't mean that he is good tomorrow. You have to always look at the sources of the money. You have to always look at the individual. And basically, when, like Andre was saying, it's also important, you have to vet your partners, the LP, the general partners, because you trust other people's money to them to do the job. So a strict vetting and a strict ethical contact is absolutely necessary. And when you have a bad feeling at the beginning, just really don't pursue it. Don't let greed come up. Be extra cautious when something looks too good, because it is difficult when you're a VC fund to find banks which you bank with, especially exactly for this problem. They want to avoid the fines and the reputation damage. So you have also to safeguard the reputation for them. So this is one of the key issues which should always be considered. Due diligence, not only in the investments which you do, but due diligence also from where the money comes and who are your partners, who are your GPs, LPs, who is doing business with you in every vertical. It's one of the most important things. Speaking about this, 1 second, I have to cheat now, I have to look. There was, yes, there I wanted to touch base. Why is it important to have accredited investors and not for a VC fund and for a private fund and a hedge fund? Of course, it's the law. This is basically says it all. But to understand why we could in America file also a Reg A and have somehow raising limited money and not have all accredited investors. David, why did you choose to go directly only to accredited investors?
Yeah, so a couple of components. I mean, ultimately, blockchain and crypto in specific, is a high risk, high reward area that that not a lot of people understand, and so limiting to people that are able to take on that higher risk, and that also usually have more of an understanding of the risk, is something that we found to be very important, especially emerging funds tend to be higher risk, high reward. Blockchain and crypto also tends to be high risk, high reward. And so as an emerging blockchain and crypto fund, we found it really vital to be focusing on accredited investors and above. Relatedly, also with that thought of going international, we felt it more prudent to follow a more stringent set of rules such that we would be more likely to abide by regulations across countries, and we didn't see that type of potential in a Reg A plus. And then additionally, especially as an emerging fund, something like Reg A comes with more stringent financial disclosure requirements, more stringent operations in certain capacities that ultimately result in higher expenses. And so those higher expenses ultimately also can detract from the reward potential for the investors. So in terms of running an emerging operation with an eye towards maximizing what we could do for the investors, at a sensible cost basis, it made sense to us to go after 506B rather than a Reg A plus.
Andre, thank you. Thank you, David. Andre, same question to you.
Well, we work with not only with accredited investors, we work with individuals, with the family offices, and as I said, not only with US LP based, but also with international investors. And this is also very important, the previous question, because if some individual, even a wealthy individual, approach you, you need to do your KYC, do your homework. And obviously, when your fund is not only attracting from institutional investors, and you have a kind of spread base of your LPs, it's a lot of work. So you need to rely on professionals that can actually work with your LPs. If you keep in mind that you're going to have dozens of the people, and obviously each is an individual and particular case. So all of this should be compliant with all the regulation. So it's a lot of work, and this is why you need to do this work, because as I said, we work not only with accredited investors, but with all the possible individuals and the family offices, corporations, and so on and so on.
Thank you. So we're coming to the last question, and we only want 7 minutes till now overtime. Good to be online and not having the next panel chasing off the stage in Davos. Total other feeling, Andre and David, isn't it?
Yes. It's good to be relaxed. Yeah.
Good to go. It's like
Absolutely.
Just for the audience, Andre and me, we had several discussions just to turn off microphones during panels.
Yeah.
So, so the next question is, we know we basically started with a conception of a fund, some regulations, a total overview. Now we speak about one of the things. Of course, you make a PPM, private placement memorandum, you raise your first round, everything goes smooth, everything is happy. No, just joking. You will have a hell of a work to do, but you will succeed when you are good. But now it comes the second question. We have to raise another round, or we want to raise another round. There, of course, accounting becomes really important. We have different kind of funds, of course, and this is also the difference by a mutual fund, which you run the accounting basically every day. You evaluate your assets every day, and you know how much the fund is worth at any time. And you have to do it because you constantly get new investments in. It's easy when it's a fund which invests in stocks, because it's 10 Apple shares plus 5 Google shares plus 2 WorldCom shares, means the WorldComs are worth nothing anymore, and the Enron shares, but Apple and Google are worth something, and you can just add it up, and you have the value of your portfolio. So basically, it's not so complicated to comply under the GAAP, but especially in funds like Andre and David runs, it becomes much more complicated. David's fund is the lesser complicated, as the crypto assets can be evaluated also over the exchanges. Also, when there's arbitrage between the exchanges, terrible risks which are with the exchanges, which is all that exchanges go out of business and all the money is gone. But the VC funds are really the most difficult ones, because when you raise a second round of money, you have already companies in. These companies, we all know from the pre-value evaluation and the post-value. So when I have a company and I just have an idea, it's worth thought. Let's take as an example my invention of the ringback tone. I have the idea. This company is nothing worth. I get from friends the money, and I can go to the patent attorney and file a patent. Now the company suddenly increases with this little money tremendously already in value. Then you practice, it increases tremendously in value, but it's untangible value. You have nothing to sell. You have to reevaluate it on the GAAP. So how do you address the future rounds of raising money and evaluating your assets on trade? This is a long question, sorry.
Oh, well, it's a long question, but I try to be very short, because this is in our current fund, not the one that we're raising, but the operational one. One of the big 4 firms is actually doing the annual appraisal of our assets. And we still call it paper valuation, because it's paper valuation because this is assets are determined by the, for example, rounds that company raised. So basically, this is the base to say, okay, it was, for example, 3 million valuation last year, but because the company raised in $10 million valuation, so it looks like in the paper we already our assets grown 3 times, right? But this is kind of accounting stuff. But most important one in the venture capital business is not what your paper valuation is, but actually what is your exit valuation is. So basically, and this also always tangible, right? Because when you sell the shares, all you care is what is your multiple on the investments. Okay, so basically, what happened during the years, it only can be relevant if you have evergreen fund and the new LP, for example, step in the fund after 3-5 years of the lifetime. If you have evergreen fund, yeah, that is important, because the question is, okay, we invested 5 years ago in the fund, okay, but the portfolio have grown, and if the new LP will come in, obviously it should be different, the valuation of the whole portfolio. Okay, but if you don't have an evergreen fund, you have a like traditional fund, when all the LPs come in, then honestly, of course, we give annual reports to them, and sometimes, like right now, for example, many companies have decreased valuation, or having the down round on the paper, but all of this kind of in the between game, because the end game still is how many exits you will do from your portfolio companies and what multiple on the initial investments. And to be honest, all LPs, they care basically for the companies that have a biggest exits or biggest returns, because all the economics of the funds is basically work on the one unicorns, or at least a few companies that you have exits with a multi-hundred $1 million exits. Okay, if you have it in your fund, so you're pretty much good in terms of making at least 2-3 cash on your investments. If you don't, it doesn't matter what is the paper valuation of your companies are, because your LPs don't have a liquidity, and liquidity only comes on exits. This was most important part of it. Is this why, as we say, relax. Even if you look, if the paper valuation look good because the company raising at the bigger valuation, but in the end of the day, it's all about the exits. So our LPs are very happy when we do exits because they can get their money back, and of course they're interested what is the returns, what are the X on the exit we made. That's all it counts. But I'm not diminishing the role of the accounting in this part, because obviously it should be done. All of this is professional by the standards, but I'm just telling you that once again, we are focusing on returns. We are not focusing on the providing accounting, because for that we need to have a partners that taking care of all of this part for the funds to be legit and be operational.
Thank you. So as chainBLX also, we are also offering programs for corporate venture funds, and this is exactly what Andrei was just speaking about. The exit is really the important things for corporate venture funds. The exits are even more attractive as the corporations already seeds the fund, has a lot of investment in, and general partners can, limited partners can then invest in addition to it. The interesting thing about such funds is that an exit is already given, that the exit is programmed when this company, which is interested now to a big multinational and will be a good addition to the product line, or will have a core technology and should be acquired, that this company lets it run separately as a company and would acquire it when the company succeeds, how they think at the beginning, helping with diligence and everything. But on the other hand, you have still the choice when this company is not performing as well, still to have the normal exits, to sell it to somebody else and so on. So this is a lot of companies speak about this strategy with us. But sorry, I was carried away, and I wanted to respond to your points, which were really important and valid, Andrei. So David, what do you think about accounting, valuation, and so on from your funds?
Well, from our side, I think it was a question of trying to find the balance between a certain level of freedom and security, essentially, both from the team side of the fence as well as from the investor side of the fence. So, in terms of the Cayman structure, what was attractive for us is that a component on the accounting side that was attractive for us is that the fund itself is not paying taxes on a trade-by-trade basis within our fund, which is of a strong advantage to the structure that we're looking at, where we have, potentially hundreds or thousands of transactions in certain days. There becomes a lot of logistical overhead involved in calculating out the ramifications of something like that. But conversely, what we did like as well was that there was a lot of kind of structure and transparency to the accounting requirements as well. That that a third party accredited audit is required, and that we could get get that level of oversight from a third-party auditor, but also that we could have support on the accounting side through chainBLX as a fund admin. So essentially, having a bit more of freedom on the potential tax implications of specific trades was of interest, while also having more structure and more potential transparency for investors around the accounting.
Thank you so much, everyone. So what we saw is 2 different funds, 2 different strategies, both of you really experienced. Thank you for joining it, and thank you for helping to give our viewers a view from 2 different perspectives and a comprehensive view over hedge funds and implementations. I thank you so much for your time, and I would like to give a closing word to Andre, a closing word to David.
Well, Carl, thank you for this interesting discussion. So hopefully it was useful for the audience. Obviously, we would like to continue this after the current seminar. So we'd be happy to work with any LPs or even with GPs in terms of how to work with the fund. And obviously, we would be interested to also to do some kind of joint projects. Okay, because obviously, as you point out at the very beginning, to rebuild Ukraine on many fronts is multi-trillion-dollar opportunity. And as I said, this is an opportunity for the all GPs and LPs around the world to do this properly, as institutional framework, as finding the right partners, and so on and so on. So everybody is welcome in this journey. It's still just the beginning, but it's still also happening now. Not just in upcoming years, but actually now the opportunity for many big funds that already step in, that we saw in Davos. They already all announced that they're going to raise in, or they're already raising the funds for this type of things, just to have to 2 things: to have an impact, which is very important and so, but also have the profits, because obviously it's one of the biggest economy in the Europe, and which is going to be rebuilt in a new way. But still, we need to continue to invest in the entrepreneurs. It's more than 1 million entrepreneurs that today are performing, and many of them are doing great. So we need to come in as investors with a long horizon, with the short opportunities, and so on and so on. So everybody's welcome, and I would be happy to continue to work with you and with all the community that you have built for all these years. Digital Davos become really digital and very important part of the community for the Davos. Thank you so much for doing it.
Thank you very much, Andre.
Well said. And apropos of Davos and WEF goals and such, that there was a recent WEF report projecting tokenized assets expected to expand into a $16 trillion+ business opportunity by 2030. So within the next 7 years. And ultimately, we're really excited as well by the ability and by the potential of that. So by the potential to partner with other excellent funds, within the space. Hopefully, also be able to contribute, through crypto to Ukraine redevelopment as well in the future. But yes, happy to have further discussions on, really, I think that idea of finding what the soul of your fund is and how you can have the structure kind of follow the goals and follow the priorities. So happy to be a sounding board around that, and then also would love to have conversations with anyone about how we might work together. So feel free to reach out to me on LinkedIn or elsewhere.
Thank you very much, and this concludes our seminar. So let's hope that I find how to end the live stream right. Okay. If not, everyone sees me on the computer working. Thank you. Have a good evening.
Thank you.
Guys, phone me when the live stream wouldn't be interrupted. Thanks.